Good morning, Jags. This is Fahad. Today is Tuesday, December 22nd. Let's get started. There was a time in the history a couple of years ago when if any company ever said that they are going into a, a crypto mining business, we would see their stocks rally 30, 40, 50, 100% or even more within a matter of just a couple of days. Crypto mining business, basically, at that time it was seen as printing money for free. What could be wrong with that, right? And so we saw Riot. Remember Riot? There was a time when this stock, Riot blockchain, a couple of years ago when it just went absolutely nuts. And then there was a time after that when a second hysteria came out, and then after that, Bitcoin bubble burst. And the second one was when any company, if they ever said that they're going into cannabis production business, they're going to start to grow marijuana, because as on the Canada and one by one states in the United States were legalizing, well, their stocks will go absolutely nuts too, 100, 200, 300% rising in the matter of days. So remember Tilray and CGC, Canopy Growth, and Aurora Cannabis, and a whole bunch of other companies. And now we live in a world in which anytime when a company says that they're going into electric car production business, their stocks basically skyrocket. And so you're seeing this across the board. There have been a lot of Chinese companies that have just gone absolutely nuts, such as NEU, right? This is a Chinese electric car company, or NEU, which is, by the way, a beautiful looking technical setup over here for the next leg higher. This is the Chinese electric scooter maker that we discussed in webinar a couple of weeks ago, NEU. So look for this to break out through $30 per share after building a base over here. And similarly, LI, which is LI Auto, which is also pulled back and building a base. So there's all of these different companies out there. So yesterday we got this news about Apple now thinking about getting into the electric car business. And as a result, Apple stock skyrocketed late in the session and continued to march higher even the after hours. And it's going to now open higher by $4 in pre-market, which is a sizable move for this company. So it's going to open about 3% to the upside. That's going to keep NASDAQ continue to rally sharply. And so we discussed a lot of call options before that news came out. And then related to that, as this news came out from Apple, Reuters also reported that Apple is thinking about doing partnerships with key technological companies tech makers, essentially, that make the LEDR technology, to be able to get into this business. So VLDR is the pure play on that. We bought call options in this one, which is right here on December 7th. When we issued this trade idea, we said buy deep in the money, which is March 1535 call spread for $3.90 or less. This is a $20 call spread that we bought only for $3.90. This call spread is going to double today, because if you look at what VLDR is doing in pre-market, it is rallying sharply. At the time when we issued the trade alert, the stock was trading at $18 per share, and it closed yesterday with a sharp spike when the Apple news came out. It closed around $24 and change, and now it's trading at $28 per share in pre-market. So it's going to open up another almost 20%. And I mentioned in the chat room yesterday, we'll probably see $30 per share. So looks like it's gunning for that. We're probably going to see $30, maybe even $35 per share. And this is not with any kind of fundamental change in picture. If Apple is going to make a car, it won't even come out until 2024. We don't even know what kind of or growth or anything we will see. It's just how the market is. There is a market finds these euphoric phases in different segments of the market where everybody piles in. And then if you can catch those euphoric phases, there's nothing wrong with that. There's nothing wrong trading a bubble as long as you're making money. You just don't want to be in it when things start to basically go to the other side, or when Tilray was falling apart when the cannabis bubble burst, or when cryptos were falling apart when that bubble burst in 2018. And so there is a craze right now for electric vehicles and the whole ESG theme and everything. So why stop at $30 per share? Might as well, this thing can go to $35, $40, or $45 per share, maybe even higher, right? There's another stock in this category that is also catching a bid this morning, which is, we have never covered this, which is called Amethyst, a symbol AMTX, Amethyst. Again, this is how things are in the market. So lots of money chasing any kind of good news on electric vehicle production. This is a $2.36 stock that in pre-market is spiking by 50%, and it's going to open at $3.70. Why? Because this company is announcing just moments ago in pre-market that Amethyst enters electric vehicle market through stake in zero-emission heavy-duty truck producer NEU Motors. Don't even mind what the hell is NEU Motors or what kind of market they will have or anything. It's just the news, the headlines that catches the traders by surprise. Oh, wow, electric vehicle makers, let's take the stock higher, 50%, 100%. You catch these moves, that's fantastic. And that's the kind of market we have. Anytime anything related to electric car comes out, these stocks just go absolutely nuts. I'm looking at AMTX stock this morning. This has a market capitalization of only $50 million. That's it. And this company generally previously has been a refiner, not an oil refiner, but basically this company traditionally has been in the business of production of fuels and chemicals through various acquisitions. And it produces ethanol and biodiesel plants into biorefineries. And a big bulk of their business is really established in two countries, one in North American facility, and then there is some presence in India. So all of a sudden, this chemical company, biofuel company, decides that they want to get into the electric car company, and the stock is higher 50%. The thing is, this is a $50 million market cap. All right. And so and right here, they say that Amethyst is excited to become a significant shareholder of NEU Motors just prior to the launch of NEU truck product line planned for 2021. This strategic agreement utilizes the production buildings, on-site railroads, renewable electricity substations, and other facilities at the 140 acres, 710,000 square foot Amethyst Riverbank, California manufacturing facility, and so on and so on. All right. And they talk about how this is a $90 billion industry that they want to make the presence in. So my question is that this is a 50%, but this is a $50 million company. What's going to stop it from becoming a $100, $200, $300, or $500 million company? Right? I mean, that's the kind of market we have. Could this go to $5, $6, $7, maybe $10 per share? Just putting it out there. Just that the kind of market we have. Separately, I want to discuss one other stock real quick, and then I'll move on past the discussion to my team. THO Industries, THO. This is the RV maker. Keep an eye on this technical picture on this chart. This is a major VOP resistance. Also, you can call it neckline resistance of the inverse HNS formation. You can see this is the inverse head. This is the head. Sorry, this is the left shoulder, this is the head, and this is the right shoulder. So HNS, inverse HNS formation, and it's attacking major VOP resistance around $100 per share, and the volume has been surging as it's coming up to this major resistance. If it takes out the $100 resistance, there's an air pocket above this stock all the way to about $108 per share. Right? And so there's about as much as 8% to the upside that's coming in this stock over the course of, in my opinion, very soon, within a couple days or a couple weeks. So keep an eye on this one for a breakout. And the reason why I bring this up is because last week on December 18, its competitor Winnebago announced its earnings, which was very well received by the analyst community. This company posted rather a remarkable quarter to surprising many. Specifically, they mentioned that the revenues were $793 million versus $752 million estimate. EBITDA was very, very strong, rising to $89 million versus only $60 million street estimate. And immediately after that, on 3 days later, on December 21st, which was yesterday, The Recreational Vehicle Industry Association, or RVIA, also reported its November shipments, which shows November shipments were up 43% year over year. Total RV shipments in the month of November were 42,000 versus a year ago of 29,000. That's a sharp acceleration from the prior month, October, when the shipments rose by 21% year over year in the month of October. So October was up 21% year over year, and then November sharply accelerated to 43% year over year. Combining that view with very positive comments that came out from the CEO of Winnebago last week, and this stock immediately started to move higher. This is a positive read-through for Thor Industries as well. And as a result, I expect this stock to perform in line with the industry improving, and we could see a stealth rally all the way to $108 per share. Also, quickly, there was another news on Thor Industries, THO, in which they announced a small tuck-in acquisition of a company called Tiffin Motor Homes for $300 million. This was yesterday. Tiffin Homes had $800 million in sales in fiscal year 2020. And what this does is this is going to substantially increase the market share position of Thor Industries, specifically for their RV market share. With this acquisition, the market share will increase by 70 basis points to 42.7%. Their motorhome market share will increase to 45.2% versus 38% previously. So that's a sizable increase by 700 basis points. And the Class A motorhome market share will increase huge to 48% versus 33% previously. And so as a result, I expect forward earnings estimates for Thor Industries to go higher from this acquisition, also because of the channel checks that we're getting with RVIA, the industry association. So that's it from me. Jay.
Morning, everyone. So two stocks to talk about today. Number one is Generac, ticker GNRC. Technically speaking, had a nice candle yesterday, sets up for another breakout. Fundamentally, yesterday there was an article published by the Wall Street Journal talking about families turning away from nursing homes and gravitating toward home care to be closer with their parents. B of A had just a very brief note this morning with the title, "A Secular Driver That Might Just Be Getting Started." They go on to highlight, taking care of an elderly parent at home requires backup power for an emergency. So to ensure, home oxygen is working, to keep your phones charged, to ensure the alarms are operational. In many cases, they think the mere avoidance of a month or two of nursing care payments could finance the installation of a home standby generator, assuming an $8,000 to $10,000 cost. So essentially, could this be, another catalyst? We've always talked about Generac and hurricanes and wildfires and whatnot. Could this be something that, creates more demand? We'll see. Obviously, B of A doesn't have any proof of that right now, but they try to, basically provide sort of a sympathy read through from this nursing home article from the Wall Street Journal.
Interesting. Would have never tried to connect the dots between a nursing home, and this business, but a bit remote way of connecting the dots. But you know what? This is outside the box thinking that could never be possibly in the consensus view. So interesting.
Mm-hmm. And then second stock is Leslie's, ticker LESL. This is the pool and spa retailer that I wrote about on the homepage back on October 30th. The company had its debut earnings yesterday. Stock finished up only a couple percentage points, but looking at the numbers, Q4 sales increased 27.9%. Comp sales were up 23.3%, and that was above at least B of A's estimate at 22.9%. Operating margin was 18.4%, which was slightly below estimates, but the company noted they've been clearing out branded equipment inventory to make room for their private label products, so that should ultimately help the margin profile there. The company cited the estimated 200,000 new pool permits going forward into 2021, that as a meaningful contributor to pool growth. And then B of A mentioned with an average of $800 annual spending in pool maintenance, an expected $5 billion sales will be created for the market. Leslie's, which has more physical locations than its next 20 largest retailers combined, should be able to capture a large portion of those market gains. Additionally, the company announced that its proprietary AccuBlue water testing technology, this is one of the essential services the company offers, is now available in all store locations, and an at-home version through a subscription model is being tested right now. B of A believes the AccuBlue will further improve Leslie's customer loyalty, both in-store and online, and will ultimately expand upon the company's omni-channel advantage over its competitors. Now, finally, Jeffries was out with a note last week, specifically talking about the loyalty program that the company has. The latest data shows that the program has 3.2 million members. Members today account for 70% of sales and 60% of transactions. They believe that program tweaks are likely to include escalated reward tiers, exclusive access to certain products, and then heading into 2021, Jeffries is going to be keeping an eye on the launch of Leslie's Pro Site, the rollout of buy online, pick up in store, the growth of the water maintenance team, and the AccuBlue Home version 1.0 that B of A also cited.
Lots of very interesting stuff over there. The stock has been actually running quite strong lately as well. This is the AccuBlue technology for water testing for swimming pool that you're talking about, and I actually have personally used it. I go to Leslie during the summer months. I don't know, probably 5-6 times in the summer, every couple of weeks. Sometimes I'm buying salt. Sometimes I'm buying sometimes I'm doing exactly this, testing the water chemical levels. And so I just take a sample in a bottle to the store, and they check it for, this 10-point water test for all of these things. Anything is off, pH is the most important one. They tell me, okay, so you're off here a little bit, and then I just buy it and I just dump it in the water. Keeps it nice and clean, even though I have a saltwater system. And so it's all mechanically run automatically with the equipment that's installed, but that is but like to keep it pristine clear. So I'm very familiar with this company, use their services all the time in the summer months. Now, the interesting thing that just to try to extrapolate this view is that with the bullish view of the industry that you're talking about is likely also positive for Pentair.
Sure.
Pentair is the company that actually makes the pool equipment. It's the biggest supplier of PVC pipes and all kinds of equipment. I have Pentair equipment in my pool as well. And if you're talking that the industry trends are so powerful as Leslie's talking about, that's likely also means that it's going to continue to translate into good earnings for Pentair. Good stuff. Guys who missed it, check out this article that was written on homepage on October 30th. This is just now. LESL is just now starting to run, and it's going to take this post-IPO highs around 25. Let's see how high this can fly. Good stuff. Jay, Chronicle.
Good morning. Two things today. So first off, I have a quick update on the Harley-Davidson short idea that I recommended about three weeks ago. During our morning conversation, like if you recall, the thesis was that the stock was running up to a strong resistance level, while at the same time, the latest checks for the company weren't great. But currently, I think that trade has mostly played out, and it's time to take profits if you haven't already. I got out of this one myself during yesterday's session, and we also recommended to do the same on Jaguar Live yesterday. And the reason for this exit, as I mentioned back, when I first recommended the short, is that this was always meant to be a nimble trade where we're trying to capture about 15% downside, give or take, while getting a temporary hedge against, the broader market being overstretched. And so it had a bit of a risk-off moment yesterday, so that was a good opportunity for us to cover in the midst of that selling.
Good stuff. We did tell our Jack clients in the chat room yesterday, this was a nice short as it started to roll over, and a perfect entry too from 40 down to 35. So hopefully everybody banked profits in this one. Good stuff.
So now that I'm out of Harley-Davidson, I'm looking to open a new short position in a company called NEU Market Corp, symbol NEU, because I'm always looking to have at least one or two short positions in my account, because because of how volatility spikes tends to spike out of nowhere these days. I just think it's too risky to have 100% net long exposure, nothing on the short side. So to give a little bit of context, one category of company that I tend to go for when shorting is what I like to call dinosaurs. What I mean by this is basically companies that I think have already peaked in terms of growth, and it's either going to be flat or downhill from here on. In other words, secular decline. Because even if I'm wrong, the position is probably not going to go too badly against me. And also because I can nimbly short the stock and cover multiple times. So it's less work than having to always find something new to short. So coming back to this company, NEU Market Corp, I think it's also showing some, characteristics of being a dinosaur. To give some background, what this company does is it provides all sorts of performance additives for petroleum, mostly for engines, but also many other industrial uses. Naturally, this means whenever oil prices start to get elevated, that's when this company potentially starts to see lower demand, simply because there's less customers willing to spend on additives, which is why if we look at this chart showing oil and new market stock, I think it's on one of the other slides, we can see that there's sort of an inverse correlation where whenever oil goes up, yep, it's the bottom chart here. Whenever oil goes up, it creates pressure on the stock and vice versa. Now, currently with WTI and Brent elevated close to $50, while global travel continues to be stop-start, I doubt there's going to be much demand for additives. But I think the real danger is if we continue to get overall demand overshadowing supply, which is already the case if we look at the IEA's reports. And also, if we continue to see shale and OPEC producers being overly conservative with their capex and production cuts, and then on top of that, we have Biden who has been promising to ban drilling on federal land. And we also have JP Morgan, Bank of America, and all these other banks making it difficult to lend to shale companies. When I put all of this together, I think there's a risk here of unexpectedly higher oil prices if not enough production comes online quick enough once we get past COVID. Like right now, it feels like everybody's focusing on storage, but very few people are looking at severe capex deficits in a reopening scenario. And the thing is, if we do get that production shortfall shock scenario, which I think will happen, that's not going to be good for NEU Market Corp. So that's my first point. Now, my second point is more to do with the dinosaur aspect. So back in the 2000s, this used to be a high growth company because they were expanding internationally and they were getting new industrial customers all over Europe and Asia Pacific. But if we look at this chart that I shared, we can see that their growth has saturated dramatically over the past decade. We're talking flat to slightly negative revenue and profit growth. So Fahad, I think this is a dinosaur in the making because they've pretty much reached the pinnacle of their growth, and I don't see how they can reinvent themselves going forward. Like we also have to take into account China and various European countries trying to get to zero emissions and also promoting the use of electric vehicles. So this is very much a secular decline story. And then just very quickly, two more things I'll mention to support the short idea is, number one, this stock doesn't have large presence in ETFs. So it's not going to be a big beneficiary of passive investing. So if I'm short, it's not like I have to fight against the passive funds. Number two, this is not a crowded short. The short float is like 1%, so no risk of a squeeze here. Now, lastly, in terms of technicals, I have two charts. The first one is a long-term weekly chart. So consistent with my dinosaur thesis, I think there's potential multi-year triple top forming in the stock. This could eventually break. And then if we look at the other chart, which shows the shorter term picture, I think this is a good spot to enter a nimble short, targeting mid 300s with a tight stop somewhere above 410. And if it makes us money, then after that, we can wait for the next rally to short again so that we're not shorting and holding in a bull market. Like, there's nothing wrong with tactically trading the stock multiple times on the same long-term bearish thesis, because shorting and holding like as though it's an investment, that's been a losing strategy in this market environment, as many bears can attest to.
So this is my technical view on this one, purely in the short-term basis. If this, we saw a very high spike in the volume as it started to fade, the rally that we saw on Thursday and then Friday it started to fade. We have now an RSI bear cross as well, and looks like we're going to get the MACD bear cross as well pretty soon. If it starts to break down from this 390-ish level, it opens the door potentially to return back to what is going to be a major congestion, VOP congestion, where the bulls and the bears fight it out around $360 per share. So on a percentage basis, that would equate to about 12% decline from current level. So this is how I would read in the very, very short term where it could potentially go, if this especially if the market also cooperates with some weakness. Interesting update. We'll keep an eye on this one. Thank you, Chronicle, and a fantastic trade on Harley Davidson as well. So good stuff. All right, folks, we're going to stop over here. Thank you very much. See you in the chat room shortly.